Hello everybody, Gbenga Olatunji here. Ratio analysis. When we are talking about measurement of achievement of performance in an organization, return on capital employed comes to mind, return on shareholders capital comes to mind, and any per share. So these are some of the ratio analysis that we'll be looking at. And as finance people and as accountants, this is one area that we cannot overemphasize in strategic financial management. So we are going to look at Roce now, after which we will look at return on shareholders capital and earning per share. But before we go into it, it is important that I mention some key things about ratio analysis. Ratio analysis is widely used when we are measuring return on investment, when investors want to know whether they should put their money in something, in an investment or not, even the general interest of stakeholders. ROS is one of the things that they will look at. Also, when we're talking about return on capital investment, it varies from one industry to the other, and it's good that we compare it, not just compute our own organization's rules and think that that's the end of the meaningful use of rules. So we should compare it widely. If we invest so and so capital amount of capital in a business and in different industry or in a like industry, the same amount was invested and return on capital investment was better. That may be pointing our attention to options and alternatives. Then also when we're talking about roles, it is a base and a snapshot that comes and derived from balance sheet. Now, statement of financial position. So we derive all the components from statement of financial position. As we go into it, it's important also for me to mention that when we're talking about return on capital investment or employed rather, we need to know and be able to lift which aspects of returns are we going to need, which aspect of return are we going to need. When we're talking about returns now, we will need the figure for profit before interest and taxation. Don't forget that on the balance sheet for the retained earning, all this will have been merged together. So we need to be able to separate it or ensure we pick it from the statement of comprehensive income. So we need profit before interest and taxation. We are going to get to a point that we need for some other ratio analysis that we need profit after tax. But now you need to pick on profit before interest and tax. What other thing are we going to need in computation of return on capital employed? We are going to need capital employed. Of the capital we employ. I just observed one thing that I did not actually show you what I was talking about. Now we can see it. So let me go back and say it all over again. So we need the figure for profit before interest and tax. Then after that, we need capital employed. That is the capital injection into the business. So we now ask, what is capital employed and what does it comprise of? The share capital, the reserve, don't forget I mentioned about reserve. So the reserve now, the totality of reserve figure, long-term debt or indebtedness in form of our capital, like preference share, bond, and the like. So these are all employed to form the capital base of the business we are talking about. So we need to pick on it. So ROCE is calculated therefore based on profit before interest and tax divided by capital employed. Now let us look at how to compute ROCE. This is an example in which we are given the opening figures and the closing figures for the year. We have our share premium, share capital, retained earning, bank loan that we open the year with and that we close the year with. Also, we were given the profits before tax and the tax expense itself. We were equally given the interest charged by the bank on the loan that was on our balance sheet. So how are we going to pick on all these items and utilize them effectively? That is what we want to look at now. So now don't forget, we need here our profit before tax. So how should we calculate and what are the figures that we need to pick on? We need a figure for profit before interest and tax. So we need to lift a figure like this. So therefore we need this figure. But don't forget, we do not need interest and tax expense. So that means this amount, 65,000, we cannot use it. So that means we cannot lift 145,000. But definitely we need 210,000. So we will pick on profit before tax, 210,000. Then there is another thing we need to pay attention on now, which is the interest charge. 30,000 interest charge. We need to pay attention on it. Don't forget that before we can get our profit before tax and tax expense, we will have expended in the P&L our interest charge, which is 30,000. So we need to add back this to the profit before tax. So we have our profit before interest and tax now. 210 plus 30,000 to give us 240,000. So we have 240,000 now to use as profit before interest and tax, which is this. So that's our working one that we just finished. Then our capital employed. Basically, they've done well by giving us everything that we need for opening and for closing of the year. Now, because we were given both the beginning and the ending figures, we need to have an average of it. But supposedly in your question, you were not given the opening, you were only given the closing. So you just pick the closing figure and use. So that means you don't need to divide. So our opening is 100, that is adding up all the elements that made up which we had elaborated. So we have our 1 million plus 1.4, then it gives us 2.4, then we find an average by dividing by 2, and we have 1.2 million as our capital employed. So we put it at the base, then everything is in percentile, so times or multiplied by 100. So at the end of the day, our Roce is 20%, and 20% is not a bad figure for a business operations. I want to believe you will agree with that. Any organization that made 20% of as rules is a good business that an investor will like to invest in. So this is how return on capital employed is calculated. Join us as we will be looking at earning per share, how to calculate it, and how to calculate return on shareholders capital. If you are yet to subscribe to GGM Associate channel, please subscribe now. Click the notification button and like us. If you have a comment to make as regards what we just learned together, please reach out to us, maybe by mail or by commenting. You can be sure that we are going to respond. From GGM's Associate channel, Gbenga Olatunji FC is my name. We have value to life. We have value to your business.